Hi to everybody, the FutureTrend channel is again with you, and this day we'd like to focus your attention on protectionist policy of the United States. You know that during yesterday a decision by the United States President Donald Trump to impose a new tariffs against Chinese imports, and the total amount is around these measures is around $60 billion. Of course, this kind of measures should meet retaliation efforts from the side of China, and that's for sure that will mean that in the nearest future we could enter a kind of very dangerous period, a period of mutual trading wars. And in this case, of course, the risk aversion fears should remain on the rising path, and from this point of view, such kind of currencies with the safe haven status like Japanese yen or Swiss franc should remain under strong buying pressure. I mean the upside pressure in the currency. That's why we still predict that, also taking into account not so bullish view expressed by the Federal Open Market Committee over the course of this week, should dampen the nearest future bullish kind of expectation regarding the United States dollar. That means that probably the euro dollar has some upside potential, and despite of the fact that our long position, our long trade recommendation was closed yesterday with a small profit, we still suggest to rebuy the pair on a possible down move below 122.90. Our longer term picture is quietly bullish regarding the euro dollar. As you can see, the longer term uptrend line lies around 121.90, and while above of this level, we still predict that sooner or later the pair will be back to its underlying uptrend, and current highs around 125.50, and even longer term downtrend around 26.40 should be tested in the foreseeable future. Now, where is the longer term downtrend line? Today it lies around 26.40. Regarding the dollar yen, we are ready to sell the pair on a possible uptick above 105.20. The current lows around 105.25 was finally broken, and now we suggest that dollar yen has everything in its arms to continue its downside progress in the direction of psychologically important barrier of 100. So we suggest that we can put this kind of level as a new goal for those who are looking for a bearish strategy into the currency. Sterling, although we still keep our long trade recommendation, we have a kind of very close stop loss at 140.75, and we want to caution you and also to remind you about the about today, that today is the day of final release of the concrete details of the Brexit transition period agreement, and it will be very interesting to see into details, to look through them, and to understand what does it mean for the future of the UK economy, economy and the currency at the moment. But that could happen over the course of the day, probably around the American session. The time will show anyway. And the dollar Swiss, as you can see, the dollar Swiss are on the downside again, but again because of the rising risk aversion fears connected with the current protectionist policy conducted by the United States. and now against Japan. From this point of view, commodity block of currencies should remain under the pressure, especially such kind of currencies like, for example, Australian dollar. Although the pair still at the moment trades above recent lows of 76.70, we still expect that the pair could retest some lower levels in case of such kind of trade wars deepen in the nearest future and will expand further to the upside. The New Zealand dollar, we still keep our long trade recommendation with a stop at the entry level, and the dollar Canada probably one of the most favorable currencies to trade against the United States dollar because of recent kind of improvement between the relations regarding the future trading policy between the neighbors like United States and Canada. Also, we pay your attention on today's set of rather important domestic data, Canadian domestic data in the form of consumer price index and retail sales report. And finally, our block of euro crosses, where we still keep our long trade recommendation of in the euro sterling despite of yesterday's dip below the lows of 86.85. We suggest that from technical point of view, such kind of pattern, which we call as a false break, usually reversed in another direction. It means that after the false break to the downside, we can see as a resolution to the upside. And also from fundamental point of view, there is little chance that we could see some higher levels